Hi everyone, we are back with our guest talks, and today we'll have Vineet Rai sir with session on startup investing and valuations. Before the session begins, let me personally introduce Vineet sir to everyone. So they are already, pretty much aware about your background in there, but some very unique things that everyone needs to understand is Vineet sir has been those one of the guys who we have admired a lot for the last 6, 7, 8 years. The kind of inputs that sir has given us personally as entrepreneurs have been extraordinary. A very genuine, warm guy, always approachable. If you have few doubt at his stature, leading one of India's, private equity division of one of India's biggest conglomerate, the humbleness that sir brings is extraordinary. That is what we have learned from him till date. And we are actually sir, very grateful for all the inputs that you have provided us across the years. बाकी इंट्रोडक्शन सर आपका मैं तो क्या कर पाऊंगा सर
बहुत
आज
हो गया, बहुत चढ़ा लिया। बहुत हो गया प्रतीक।
सर आज
जय हो।
20 years of 20 years, like 2 decades of experience into capital markets, leading private investments at JM Financial into various sectors, food and beverages, education, agri-tech. So it's upon you guys how much you can absorb from sir today in the 90-minute session. So, sir, the floor is yours.
Thank
You
you.
can start the session.
Thank you so much, Pratik. Means a lot, your introduction. I hope I am able to now, live up to that pressure.
Salute.
But great, Pratik. Thank you so much. I think, yeah, in the interest of time, I will keep moving quickly. So, I think what I will do as a format, guys, is because and the good thing is that, at JM also, we have over the last, I think, since 2019. So 2019 was our first candidate from Finacle, who joined JM Financial Private Equity, and now, of course, she's an entrepreneur. Maybe a lot of people would know her. Uh,
Yeah.
Radhika,
Zebraland, sharp.
Zebra Learn founder was first, interning with us at JM Financial, thanks to Finacle.
Thank you so much,
So
sir, for the
yeah,
opportunity. You
so
were the first big firm who trusted the output, sir, in the first year.
yeah, it was mind blowing. I think what an experience that was. So I think you guys are extremely, I think great choice you guys have made to kind of, get into Finacle, and you have no idea how it's going to kind of, compound over the next decade or so what you are learning here. It's a very different compounding you will see in your own life. Fingers crossed. So great. So cool. So I think yeah, Pratik, you want to say something?
No, sir, like not just, Radhika, you have mentored so many candidates from
That is
Finacle.
true. I'm just saying the first one was
Directly,
2019. That's what. Since then,
but,
so many,
uh,
of course.
Radhika was the entire success of Zebraland to you, sir. The way she
Yeah.
learned how businesses are learned, grown
Yes.
at JM. She
Yeah.
she she became an entrepreneur. I think she's 22, 23 right now at this age.
Yeah.
It's like they make us proud, sir. Genuinely proud.
Yeah, yeah, absolutely. No, no, great. Super. So I'll quickly get started. So what I'll do is I think it's a very good idea to kind of, give me a direction that what you guys would want to learn from me. But so I'll just maybe quickly talk about me a little bit, more personal, like a professional. Of course, Pratik has already told you. So I'm basically from Lucknow, the land of Ganga, Uttar Pradesh. Brought up in Mumbai, Dadar. If you are aware of Dadar, is Shivaji Park, the land of Dilip Vengsarkar. For people who are, maybe your parents would know Dilip Vengsarkar, you may not, right? But and then of course Sachin Tendulkar, right? Who is the guy who, of course, practiced at Shivaji Park. So I also grew up playing a lot of cricket. Uh, and then, of course, due to whatever reasons, in my family, for financial situation, etc., I also started teaching at a young age. And so that's how teaching became a passion for me. So even now I teach venture capital at Narsimanji College, their management students and all of that. So teaching is my hobby. Cricket is my hobby. Like every Sunday I have to play cricket, whatever happens. So, so that's me. Rest is covered. So maybe what I'll do is that because you guys want to understand, how to kind of look at startups and all that, I think, the first thing which I would like to kind of, talk about it is you have to look at the other side of the story. So, how does the fund actually get created, right? Once you understand that psyche, then it's easier to kind of, put the hat on and, do a better evaluation. So, and since you guys are anyways, lot of studies has already happened, and I'll keep this interactive so that I know whether it's, getting, absorbed or not. So please, whenever I ask a question, I request you guys to kind of raise your hand and quickly tell me. So, respond. So like the first question is, I am hoping everyone understands risk and return, right? Just what is the relationship between risk and return? Any one of you quickly. Someone was raising the hand. Yeah, go ahead. Who was, I think a lot of people. So maybe F18. I'm just randomly picking a name.
Hello, sir. Risk and return, the relation is the higher the risk you take, there is more probability of getting higher returns.
Perfect. That's great. Yeah, and I don't want to say this, but this basic small thing, right? Because you guys are studying in Finacle, you just said it like this. I have gone to postgraduate MBA colleges and I have to take 15 minutes to explain this concept. You guys can't even relate to it because you guys just know it. It's like that. So, so yeah, so risk and return are proportional. So basically, now let me ask you one follow-up question. So, a little bit, this is where people get confused. So, as the business grows bigger, and if you are an investor, your returns should go down or go up. B77, go ahead.
Go up.
As the business grows bigger, your expected returns should go higher. You said higher. Okay, B12.
Yes, so what we expect is very different from the actual performance because when the company gets mature stage, it gets lesser return compared to the mid stage.
Sorry.
Sir,
Correct.
you're
So it's
on
the other
mute.
way around. So in fact, so when you're investing in larger companies, then of course your returns will go down, as she rightly said, because once the business, so for example, one of you decide to kind of, let's take any one of you want to become an entrepreneur? Any hands for entrepreneurship here? Anyone who wants to do their own startup? So nobody, I can't see any hand so far. Oh no, someone did.
There are many actually.
I don't know why can't I see everyone together? Is there any other view to because I can only see five on my screen. Is
Sir,
there
let me check, sir, if I can change the
maybe
view
I will
one
have to
second.
do something, right? I think the view has to change.
Correct, sir. I think you have to go to the grid view for everyone.
Grid view. Acha, view. Okay, view. Gallery, is it? I think. Perfect. Yes, now I can see a lot of people. Good. This is helpful. So okay, so I think B96. What is your idea? What startup you want to do? Who was B96? Someone who was there.
Uh,
Bolo.
Yet I've not decided yet, but I am more planning for a clothing business or more like a bigger industry.
Something in apparel industry, right? That's
Like
what you said.
type of industry like जैसे उन्होंने टाटा ने किया फिर वैसे करेगा उस टाइप की इंडस्ट्री का प्लान है.
सॉरी टाटा क्या अच्छा वो बड़ा बिजनेस बनाना है दैट आई अंडरस्टैंड बट व्हाट वुड बी योर फर्स्ट आइडिया पहले क्या करोगे सोचा नहीं है अभी
More, yeah, probably in clothing.
clothing, right? So maybe Janesh wants to kind of, start something in the fast fashion side or, something very relevant for the youth and all that, right? Because हम लोग जो पहनते हैं सब outdated हो गया आप लोग के दिमाग में. So how many of you now just lower all your hands and I want to ask you, so how, since you guys know Janesh, how many of your people would just basis he's saying this, कितने लोग पैसा डालेंगे इसके आइडिया में? Raise your hand. Nobody. कोई पैसा नहीं डाला है तुम्हारे आइडिया में Interesting. Good, right? So basically, people are, thinking that there's a lot. Oh, someone is finally, Ashna will put money in your. Chalo, good. How many? कितना लाख डालोगी, madam?
सर वो तो जब प्रमोटर से बात करके वैल्यूएशन निकालेंगे उस पर डिपेंड है.
अरे बाप रे बाप. जब okay, but intent though at least that's good, right? So I think why the probability is low is basically क्योंकि अभी तुम्हारा सिर्फ idea stage and all of that, right? So people don't know what really is going to happen, so there's a huge risk. So that is well, a lower number of investors want to put money in you, right? But as soon as you kind of say, for example, you already say, Janesh clothing or whatever your brand is, and once you kind of say covered Surat as a city, right? And then you go again, right? Now again the same question is asked to all of you कि सूरत में इन्होंने अपना brand बना लिया है, right? And now he wants to take external capital to expand into Ahmedabad. Then how many of you will want to put money? Raise your hands. अच्छा अभी भी नहीं. फिर भी somehow I think you
नहीं
are
सर.
not having too much investor interest. अरे
सर
आया
नहीं
आया
सर, actually 8-9 people have raised
8-9
hand.
people. Good. But basically what has happened is the stage of the business has changed. So your perceived risk is lower, right? So which is where a lot of people want to then look at it. So anyway, so the point is, as just quickly to cover, of course, as the business is growing bigger, the risk associated with the business is growing lower, right? It's coming down and down. So the risk return is also kind of, coming down. So which is where when we, just from an IRR perspective, I'm sure a lot of you know IRR, and just to like risk-free return, right? A lot of you. So anyone, what is typically the risk-free rate you are using nowadays in your models or whatever you learn? Okay, F18 bolo or C28, F18. How much? How much?
Sir, on
C28.
the 10-year government bond yield.
Which is how much?
So it was yesterday 6.8%, like I
Whatever. So
saw.
7%,
Yes.
right? Basically. So
Yes,
that
sir.
is your risk-free
Close to
rate.
7.
Correct. And now suppose you are investing in say Nifty and Sensex, which is equity markets. What would be the return?
So like minimum for us, it will be greater than 15% we would aim.
Okay, but say India on a overall last 15-year average would be somewhere around 13%, 12-13%, right?
Okay, sir. Yes, sir. Like Sensex and Nifty
Uh-huh.
gives majorly 12 to 13% returns. Yes, sir.
Correct, right? Now, so we are basically what we are doing, we are increasing the risk of the asset. So risk-free was 6-7%. Now we went to equity, so it became 12-13%, right? That is Sensex, right? So, but now within the equity, let's say that safest is Sensex Nifty, right? Because it's the most liquid and the largest companies and all of that, right? Anything after that is only going to increase the risk. So for example, from Nifty, you go to say, mid-cap funds, right? So then you will, of course, want a higher return than, 12-13%. Then you will go to small cap funds, so which will be again higher, maybe around 18%, etc. Then after that is all the unlisted companies, correct? So the listed, then the returns will be even higher. So now within the unlisted space again, let me see if I have a quick graph to show you, because that will help you understand this better. 1 second. Mm. Yeah. Let me know once you can see my screen. Can you see the screen?
Yes, sir.
It is on the
Perfect. So
right.
now, great. So this is the unlisted market in India, right? Supply side. Where is the capital coming from? And you can see one JM Financial name as well there, right? So what we said, so we, Nifty, mid cap, all that is listed. Now, the right hand side of the funds, which you see Kedara, TPG, I'm sure since you guys are, learning all of this, maybe reading newspapers, you must have heard these names, right? KKR, Warburg, and all of that, right? So they are large funds, started in the US 50, 80 years back, 50, 60 years back, and now, of course, they have become very big. So in India also, they will invest in very large companies, right? So but mostly unlisted, but still much larger companies, right? Typically at least like a 100 crore EBITDA minimum, if not more, right? So that kind of company. So these are, of course, large bulge bracket private equity funds. So they would have a slightly, within this landscape, lower return expectation. So would be say about maybe 22, 23%, 20 odd percent, right? Then you will come to the mid cap unlisted funds, which is where even JM Financial is playing, right? So for example, a few companies which you may have heard of, for example, Nick Ice Cream. Anyone has tried Nick Ice Cream, NIC? Maybe few of you might know. Nick, it's available on
Yes.
Zomato, Swiggy, Zomato. Okay. Right. So that was like a company which was 50, 80 crores when we came in. Now it is a 400 crore brand, right? So basically the mid-market space, or again in Gujarat, there is this bottled water brand called as Clear. It competes with Bisleri. लाल कलर का brand देखा होगा बहुत लोगों ने, right? So that Ritik Roshan is the brand ambassador. So again, when we came in, it was roughly about 200 crore. Now it is 400 crore. So these are the mid-market companies. So here the return expectation is about say 28, 30, 32% IRR minimum, around that kind, minimum 30, in and around that range. And then when you go to the last part, the left-hand side, which is where today's topic, right? You wanted to understand startups and all of that, is all these guys, right? K Capital, IDG Ventures, Khosla Ventures, Oreos, Bloom, etc., where basically they are coming in at a very, very early stage, right? The business is just about getting started or it's an idea stage, etc. So here, typically, you are like chasing anywhere between 40 to 50% IRR. So the returns are extremely high, right? The expectation returns, because, and the logic is very simple. The fund structure is such that you would be say investing in 25 companies, and knowing that, maybe 60 to 80% might just fail, right? Something like that. So in fact, does everyone have Excel right now? You guys are on a laptop, right? So you will have access to Microsoft Excel. Let me just quickly, ask you a basic mathematical question. So for example, each of you have a angel fund. Let's assume now. Okay, let's quickly do an example. You guys can parallelly open Excel for yourself. Each of you has a 30 crore fund. Okay, all of you have a 30 crore fund, and you will invest it in 25 companies equally. Okay. All right. And the target IRR for the fund is 40%. I hope you guys are writing down the facts. 30 crore is the fund size. You will make it equal investment across 25 companies. The fund expectation is 40% IRR. All investments are happening as we speak, say on 20th September. The maturity is 5 years. Okay. And the failure rate is 80%. Okay, have you got the facts? 30 crore, 5 years, 40% IRR, failure rate 80%. These are the facts given. Now you have to solve and tell me quickly on Excel. Now I'll see how good Finacle is teaching you. Let's see how many of you get the right answer. On the successful investments, what is the cash on cash multiple and the IRR made? You guys have 3 to 4 minutes to solve this. Anyone who has not understood the question, you can ask me. Just raise. You don't even need to raise your hand. Just ask me any question if you have any doubt in the question itself.
Can you please repeat the question?
Repeat the question. Okay. You are a fund manager, right? You have a 30 crore fund. You are investing the entire 30 crores today. The maturity of the fund is 5 years. Okay. And you will be investing this in equal amounts in 25 companies. Target IRR for the entire fund is 40%. IRR is CAGR, and I'm sure you guys know it, but basically CAGR rate. So on the investments that are successful, because I said 80% is the failure rate, what is the amount of money those successful investments need to make as a cash on cash multiple and as an IRR? Let's see. अब पता चलेगा कितना आता है लोग. फिनेकल का भी टेस्ट है ये अभी. फिनेकल के प्रोफेसर.
I solved it.
हाँ,
मेरा हो गया है.
हो गया. Oh, lovely. Who all have already got it?
ये- हाँ. You know that केगर मतलब कितना
अच्छा, तो
बड़ा बड़ा
institute is talking. I thought students are talking.
इंस्टीट्यूट मतलब आई एम टॉकिंग मैं तो सर
अच्छा अच्छा अच्छा, अरे आप मत करो यार.
जस्ट टू क्लैरिफाई फेलियर रेट मतलब जीरो करेक्ट
Correct, of course, obviously. Failure rate मतलब zero हो गया. I think Yash has got the answer. Anyone else? You have 2 more minutes. Ayush has got, so we got two. Pratik, I'm hoping people know how to use basic goal seek and all that Excel, a little bit, or
sir
no?
it will depend on stage to stage like people who are in the current batch they have just studied base module right now उनका
अच्छा,
एडवांस ट्रेनिंग बचा है कई लोगों का हो चुका
ठीक.
है so it will
ओके,
depend on category
कोई बात नहीं, बट वो नहीं भी पता है तो भी बेसिक टेबल बनाने तो आता ही है ना एक्सेल का. दैट 100 बिकम्स 110, तो वो
मैंने तो वैसे
लिंकिंग.
ही किया है तो बेसिकली
ठीक है. Okay, I think, yeah, last 30 seconds. We got only three. Come on, guys. And we'll not jump directly to the answer. We'll go step by step, like a true professor, like Pratik. I've learned all this from Pratik. ठीक है, so at least, अच्छा चलो, four have got the answer. So चलो, so now first tell me, at least I'm hoping all of you have got the first step. So like say Ayush, you tell me what is don't tell me the full answer. Tell me what is the first step you did in this problem solving, Ayush.
Sir, I was solving it using a BA calculator, BA plus. So first step, what I did was I calculated the end value like 40% IRR. So how much the firm will earn at the end of
Huh.
5 years.
So how much did 30 crore become?
It will become 161 crore, sir.
Perfect. Good. So first step. So everyone got this first step. All the participants. Anyone who has not got this first step, you पहले अभी सब लोग lower hand करो. Who has not got this first step? Just be honest. It's okay. And if it's okay if did everyone get this basic step that what is the goal of the fund? 30 crore becoming 161 crores in 5 years. So everyone got that, right? Cool. Okay. Good. Chalo. Now, what was the second step? Dhesh, you tell me.
Sir, actually, my first step was what was the investment I would do per company. So I divided
Okay.
30 crore by 25, I got 1.2 crore per company. Then the second step I used is the future value of the company. If the success rate I have is 20%, then I used 1.2, the BA calculator. I multiplied 1.2 by 40% success rate.
Oh, I think then you got confused. Some googly you've done. I think your answer would be wrong most likely.
Okay, sir.
But what was your final answer?
Sir, I got 1.5 CAGR, like 30 crore the success.
So you're saying successful investments, 1.25 crore became 30 crore.
Yes, sir. The if the
Acha.
80,
Okay, then you are close, not exactly there, but I think you're quite close. Yeah, but the steps are a little jumbled up. A120, Anuj, go ahead.
Sir, I also did the same thing. I divided 30 by 25 and I got 1.2 CR per company investment. And
Okay,
then,
that's fine. That's okay. But would
yeah,
that be the second step? Is what I'm trying to understand.
and I calculated the successful company, how much of companies are successful. So I multiplied
Correct.
20% times the 25 companies. So I got 5 companies which would get successful.
Correct. So 5 companies now have to return how much money?
I got the answer of 93% CAGR.
Perfect. I think the answer is right. Good. I think it's around that number, I would say. So basically what we are saying is that you invested in 25 companies, 20 died. So so only 5 companies had to give you the 161 crores which someone calculated, right? 30 crore at 40% CAGR is becoming 161 crore, but 20 are dead. Right, there becomes zero. So only 5 companies are going to give you that 160 or so. So of course, 160 divided by 5 is 32 odd crores, whatever that comes to. And you had invested, as you rightly said, in one company about 1.25 crore. So if you divide that 30 odd crore divided by 1.25, it will be coming at whatever it is, 25 times 20. So that is the cash on cash answer which I asked. Right. And then now that you know that the multiplier is 25 or 27 times, in 5 years to reach a 25x, what is the IRR? So I think someone is saying the IRR is around 93, 94%, which common sense wise seems correct. I'm not very sure. Maybe Pratik, if he's around, he would have calculated. Is that answer correct?
Yes, sir. Approximately 94% जितना है.
Perfect. So good. So good.
Basically,
So a lot of you, but is
26.8
so,
times होना पड़ेगा 6 करोड़.
perfect. 90 plus basically, right? So now you see, I think why am I doing this? It's not a mathematical example. The point is that when you're sitting on the other side of the story, when you're cutting the check, this is how you're thinking, right? That was the person I'm going to invest in. Boss, I have to see whether I can make that 93% IRR or not, right? In that startup. This can vary. So some funds may feel that I'm not going to, and failure rates are a very important assumption in this. If you have Excel ready, just keep the same thing and just, in like 30 seconds, just make the failure rate as 60%. See what number you get and tell me quickly. Right now we took a failure rate of 80%. Let's take failure rate of 60%. कितना number आता है? फटाक से बताओ. Same, nothing more you have to do. Just very quickly you tell me in 30 seconds that how much does that 93, 94% CAGR drops to?
68.16%.
Okay, lovely. Great. Super. Thanks. So you see how drastically it has dropped just by the change of failure rate. So now when you as a fund manager, your first thinking is this was that what kind of, I mean, we are all taking higher risks only, but how many of these companies which I feel will be completely a failure, right? So this is a very important input which is going on the fund manager's mind and all of that. So basically, but nobody will be gutsy enough to take it below 50 at this startup stage, right? So, if 68 is at 60% failure rate, I think it would be some 62, 61% at a half. So now you know that if you are a startup or if you're evaluating a startup, whichever way, the investor is looking for a CAGR of 60% plus from you before he invests the money. I think as I keep telling people that, most of our, life issues, right? Whether it is a relationship issue or X issue or Y issue is 100, most of the time it is because we never understand the other side of the story. राइट हम अपने पापा की स्टोरी नहीं समझ पाते हैं पापा क्या कहना चाह रहे हैं हमसे मम्मी क्या कहना चाह रही है हमसे भाई क्या कहना चाह रहा है बहन क्या कहना चाह रही है दैट इज द रूट कॉज ऑफ अ लॉट ऑफ प्रॉब्लम्स and this investing world is also very similar. We don't understand the other side of the story. And this other side of the story also has one big complication is that a lot of startups don't know that we saw that chart, right? Bloom Ventures and all those name of the funds. They are also like a mutual fund. They have also taken money from a lot of people, right? It's not their own money. So for example, SIDBI is a large institution. A lot of people must have heard of, you must have heard about SIDBI. It's a government organization. So most of these funds have taken money from SIDBI. They have taken money from State Bank of India. They have taken money from a lot of large families, HNIs, etc. And they've created this product where they have gone and promised to SIDBI, to State Bank of India, to a HNI that, okay, this is my fund. This is my 8-year life. I'm going to take money from you in the first 2 and 3 years, and then I'm going to, grow fast with the company. And in 8 to 10 years, I'm going to return all the money with so much IRR and all of that, right? So the most important thing that means is that he's taking that call that by investing in such young companies, he will be able to, give the cash back. Now, let me ask you a question. When he's thinking this in his mind, that he will be investing and then he will be ultimately giving so much cash back to, say a SIDBI or a federal bank or SBI or some HNI. What is going on in his mind? How is he going to give the cash back? Answer. Raise your hand. Suppose he has invested, you guys are 100 plus people, out of you guys, he's invested, say, in, 30 startups, out of which, say, 15 fail, 15 succeed, right? Now, 15, when they succeed, but what does that success mean to the fund manager? Yeah, Dhruv, go ahead.
So I think in terms of when you look at a lot of these startups, right, there's a lot of asymmetry of returns when it comes to startups, right? Whatever I understood via you as well, So for example, you have 30 startups in your portfolio, maybe 15 don't do well. 15 is also a very big number, because I think I read somewhere, right, 90% of these startups do fail as well. So maybe 10% do well for you, but that 10% may something like a Bharat Pay can turn up, something like maybe some sort of Zepto can come out, right? Where
Yeah.
you might just cover up for all these losses, right? And I think so that is majorly the approach.
Different point. I'm saying that now understand the product structure. After 8 years or 9 years, the money needs to go back. So how will the money go back?
Okay, that might be just via the exits, right? So technically it
So
can be,
exits. That's the
yeah,
word I was looking for, right? Exits. Very
yes.
important. So the most important thing, guys, is when he's analyzing a proposal, the first and the foremost word that comes to his mind is exitability of the investment, right? Exitability is the most critical thing for any fund manager, because ultimately when the life of the fund is over, he cannot go and give a share certificate of a Hemil startup or a Shivam's startup की फेडरल बैंक से सॉरी मैं एग्जिट नहीं कर पाया, ये आप शेयर सर्टिफिकेट ले लो. Right? You can't do that, right? I hope you're understanding. That is why I said,
Correct.
right, once you understand this side, it will be much easier for you to comprehend how you need to pitch to a VC, because so the golden rule is exitability, and exitability is within a period of time, right? 5 years, 6 years, 7 years. So now as a 30 crore fund manager, you've taken two bets, right? One, that okay, chalo, I've invested in this, whatever, 25 companies, and I feel so many of them will die, but these people who will succeed, I am hoping. So now let me ask you another question. So when this large outcomes, what is the mode of exit for these people? Anyone raise your hand? Yeah, Indrajit, go ahead.
IPO would be the main.
Perfect. Absolutely. So IPO is their favorite, right? That ultimately the company will be so successful that IPO will happen. But again, the reality is that while doing the investment committee note, or when you are actually writing to your committee saying that I'm recommending this proposal, it is a very difficult it is very difficult to imagine that actually this will go to that stage and IPO will happen and all that. So that is a great situation to be in, but you always want a backup. So there are two scenarios, right? One is bad company, that is out. वो तो बंद हो गई company, right? The company is shut down, so nothing you can do. You have to just tear the share certificate and throw it away. But even in a good situation where things are going good but not great, because our IPO means the outcome is absolutely great, right? It has just killed it. But if not, it is somewhere languishing in the middle. So IPO doesn't look to be a possibility. Then what is the next mode of exit? Hands up. Who has not spoken till now? Let's give them a choice. Jay, go ahead.
So I guess selling that your stake to some other VC, some bigger VC.
Okay, good idea. Okay, that's a good one. Anyone else? Saurabh?
So we can do trade, sell it to other competitors.
Perfect. Correct. So super. So very good. So trade sale. So when you are, see I think who said that selling to other VC. Now you look at it from the other VC point of view, where you have gone and said, because I have invested, say in Mr. Solanki's company. I can see one, and Mr. Solanki has performed okay. He had said he will do, 100 crore PAT. He's at 5 crore PAT as an example, profit after tax, right? And now, as Vineet VC, I have gone to say, to say Harman VC. Harman is also venture capital and saying कि भाई मैंने तो इसमें पैसे लगाए थे. I'd hope this. Can you buy this from me? Harman, what will be your response?
Like first I will assess that, because why he is selling that company. That will be my first question. Like why does he want to sell? Like, is the company already matured? Will we be able to generate that much return? That will be my first
Correct.
point.
And typically what will happen is that since you are another venture capital fund, you will again evaluate कि चलो ये तो, maybe Vineet is having his fund life issue and he has to get out. But now that he's at say 5 crore PAT, can I see an IPO in 5-6 years from here? So given that he has not had a very solid performance, he said he will do 100 crore, but he's struggling at 5. You will think 5-10 times whether should I really buy this from another VC. So that is where it gets a little challenging. So the most probable and important,
Sir,
sorry.
I had one question. So can I ask here if you allow?
Yes, please, please.
So the same thing I was discussing with some VCs and PEs guy last 10 days ago only. So I just wanted to understand. I was picking their brains on the exit part only
Right.
because I have observed a very unique exit methods that have come up now. Let's say through the SME IPO stage. Earlier, bringing direct IPOs needed that big bang companies. But now with such a big SME IPO market, has one more exit route, at least with a mid-scale company, has that opened up for VCP as a easier route?
Yeah, so theoretically you are right, Pratik, but practically what is happening is that a lot of that SME capital is not exactly very institutional, etc. That is point number one. Point number two, if you go and meet any reputed SME IPO banker, right? Say, reputed, or I don't even want to call them reputed, or someone who has actually done a lot of SME IPO, like say a Haim Securities, a Pantomath, which is now graduated, right? So whatever, like there are 5, 6, there is one in Ahmedabad, I'm forgetting the name. So if you go, their only question, they will not want to sit and understand the business. Their question is that what is your PAT? So you will say, sir, 12 crores is my PAT. Without even understanding too much, बोले कि हाँ 10 से 12 का multiple मिलेगा. So the way they think is that PE multiple, it should be 10 to 15 times. So now if a VC has invested in a certain, how VCs have invested and what the valuation will be for a VC to invest. अगर 10-12 के PE पे exit करने वाला तो उसका क्या होने वाला है? So unfortunate answer, Pratik, is that practically no. That is the sad part. And that also, of course, is that, I'm sure you know that SME IPO itself has its own regulations where PAT positive for 3 years, all that is separate. So all that, right? So a lot of these companies which we are talking may not even be PAT positive, but even if they are, then the basic thing is 10 to, if it's a rich valuation, 15 times PE multiple. From Dhruv to some question, what is it different in new age industries? Multiples higher? Absolutely yes, but not so far on the SME IPO platform, which Pratik was asking. I hope I answered. I think some Dhruv had asked that question.
Yes.
So sorry. So just no, not at all. So coming back, then he's again. So when he's writing the investment committee memo, coming back, right? I think he's basically saying that of course IPO is my best case outcome, but I have to of course factor in a trade sale, right? Very, very critical as an exitability option. So now why we are discussing all this background, because this is very important for you to get to the most important factor, that how do you now evaluate a startup, right? But that extremely important to get to the goal first, how people would be thinking, so that now when you start thinking, you will have better context and you will analyze it better. So now you are on that chair where you have to recommend a company to the committee, and exitability is at the top of your mind, right? So now, so now what are the 2, 3 factors you will want to keep in mind that my investment which I make will grow? If it grows extremely well, then great, I'll do an IPO. But if it does not, then at least I have a backup option from an M&A perspective. This is the way you will be thinking. Okay. So now the first thing when you're looking, and I'm sure, I think because you guys have studied a lot of modules, when you're analyzing any business, right? Now this will be a little bit more general and specific to ECP, but let's get to the first question. When you're analyzing any business, what is the first thing that you look at? Yeah, Hitansh, go ahead.
So I would look at the profitability of the company, if it is profitable consistently and if the profit is growing.
That is a little later. Nomitansh?
So I would look at the P ratio, the price to equity
अरे
ratio.
वो सब दूर दूर हो गया अभी. हाँ, अभी नहीं. दर्शित?
First, check the revenue growth. Like, if there is the company
No, you
growing.
guys are getting a little more into the company. See okay, Meet, go ahead.
Sir, product and service they are offering, or what
Correct,
kind of
product and service they are offering. And Tanisha, you wanted to say something. Go ahead.
Yes, so that was my answer. What Meet
Correct,
said.
and product and business model. And second thing is again now. So okay, so now you understood the product and business model, but what is it that you will relate it to? So for example, it's a product which is as simple as, say, let's keep it as simple. Let's say it's a bottled water. Let's keep it simple. Like industry. So finally someone said, right, Anuj, right? That market is what you will look at, right? The first thing is the market size that you will look at, because when you are writing your memo, your first bet is an IPO. Now you tell me, for a normal non-SME, SME IPO we just spoke about, but if you are betting on a proper Bombay Stock Exchange, National Stock Exchange IPO, minimum market cap you need is how much? 3,000 crores. I'm telling you, if you don't know, minimum 3,000 crores, then you have a decent IPO. Otherwise, it's a crappy IPO. So for 3,000 crore IPO, anybody knows what is the typical right now? What is the PE multiple of Nifty or Sensex? Anyone has any idea?
Sir, 22.
Oh, lovely. Great. Super. So you know it's a 22. So now let's assume that, okay, they are at 22. Say your company will get, say, a 25 multiple, right? So for 25 multiple, what is the profit after tax the company should have when you are going to IPO? For 3,000 crore IPO? Huh?
120 crore.
Market 120 crore. Perfect. Now, typically, since you guys have done so much, what is the typical, like, even in a high margin business, say it's a high margin pat margin business, right? Say it has a very unique product. So what would be a high pat margin for a company in your view? Any guesses? It's okay. Like,
Anything
any of the
about
highest. So for example, companies like a CDSL, who are pretty much a monopoly, right? They are, NSDL, CDSL. What would be pat margins of that kind of companies? We don't need to be accurate. Just tell me a range. Yeah, Ashna, go ahead. Say 35%. Okay, Durga. Say,
anything about 25% would be on a
would
higher
be
side.
very high margin.
Yeah.
Perfect, right? So so 25% is very high, by the way, right? So let's for typical, and this is like very, very rare case. So for a VCP, he will never model a 25% pat margin. You will at best go for, say, 15%. So for 15% pat, 120 crore pat, what is the top line we are talking about? If 120 crore pat, 15% pat margin, what is the top line that has to be there?
800 crore.
Someone say 800. So 750 crores, whatever it is, right? 750, 800. So which means you are betting on a fact that it will become a 750, 800 crore company in 5 to 7 years, 8 years, whatever. Now, of course, someone said industry. The second thing is, so of course, you will not be the only player. There will be a lot of other players. So when you are writing your memo, how much market share will you assume? I mean, even aggressively, you will assume a 10% market share, 10%, 12%, right? Say 5, yeah. Someone is saying 5, right? So which means if the market share of this company, which is an amazing company and all of that, is, say, a 10% market share, what should be the market size?
16,000.
How much?
16,000.
At 5%, right? Perfect. Right? 816,000 crore. Otherwise, say 8,000. So minimum, we are saying that the market size at the time of our exit should be at least, 8,000 crores. 7,000. So, and what is the GDP growing at? Anyone?
7 to 8%.
7-8%, right? So if GDP is growing at 7-8%, but of course the investment that you have done is, say, unique, right? Say it's a very unique personal care company like Minimalist, right? Which got sold to Hindustan Lever. I'm sure you guys know about it, right? So, but even that market, say a personal care market, what would it grow at? If GDP is 7-8, at best, say 12%, 13%, right? In fact, it's lower, but let's assume 12%, 13%. So, what are we saying here? That the market size has to be 7-8,000 crore, right? at 5-6, so at 12% per annum. So which means say the market doubles in our investment horizon, right? So today, what is the market that it should be? Using the 8,000 crore market, it has to be
4,000
4,000
crore.
minimum today, correct? Yeah. So that's the point. So that is the first part of the analysis that you would be doing, that what is the current market size, what is going to be the growth rate, what is, so these are the things that will come up to your mind. Of course, there are a lot of, customization, but market size is the first thing that will, come to your mind when you start evaluating a startup, etc., etc. And second, of course, then is that product business model, which is a, problem solution. What really is the, problem and solution. And then third, of course, the most important thing is the understand, the promoter, right? The founder and all of that. Now, this, of course, there is no formula to it, you know, even after 19 years, after meeting maybe 15, at least 14,000 entrepreneurs I would have met, right? In the last 19 years, there is still no Excel formula to kind of, get this right. But of course, lot of experience and gut goes into it. But if you have to break analyzing a founder into 2-3 parameters, the first and the most important parameter is something called as a mapping of a entrepreneur quality with the qualities of critical success factors of a business, right? So what is you guys understand anyone who understands critical success factors of a business? All of you? Raise hands, one of you tell me, whoever understands it better. Anyone, one of you attempt at least. What in your mind is critical success factor of a business model? How would you analyze it? You can assume a business and tell me. Assume your business, whatever is your business idea, and what do you think will be a very critical factor for making that business successful? Arey, suddenly no hands. Yeah. Someone has come. Soumya, go ahead.
Sir, I would consider my business model compared to peers and like my strategy
Give me
to.
an example. Give me an example. Don't give me theory. Give me one example.
Sir, for example, let us consider like physics wala is going to bring up his IPO, and he's
Okay.
already in a competitive market with consider Allen, an academy, and XYZ. There are many Byju's, but what differentiates from its peers is its strategic its business model, which makes it differentiate from its other competition.
Okay, I'm right now, so I'm just thinking, don't even think about the industry, and I'm just thinking just the business model. If physics wala is the business, forget the industry. What is it that the physics wala founder has to get right? What is the most important factor that he has to get right in the business model to make it successful?
To reach maximum of this of its market, like it needs to capture all most of the students, like it could attract through offers, and it has also started its commerce line in UPSC preparations and variation something
So
like that.
let me make it simpler for you. What do you think has been the critical success factor which Finacle has got right to reach where it has reached? Because it's the same industry, I'm using this example.
Finacle is giving us an early stage for preparation. Like for if I would rather join in college and pursue my BBA BCom program, it would have gotten me 3+2 MBA years to get into the cooperative world. But through Finacle 18 months course and their their process and subjects, within 18 months I will be comparatively more valuable and ready in the corporate world than others.
Perfect. So in one word, Finacle has now built credibility,
Yes, sir.
right?
Yes.
That's the key success factor here. Physics wala, if that is the business model, education, critical success factor is about building credibility through outcomes.
Yes.
Correct? Right? So that
Yes,
is
sir.
that's what. Let's take one more example because this is an important concept. Who else? Ali, go ahead.
Thank you for the opportunity, sir. I have the same example, like let's say physics wala and Finacle, right? So the
Awesome.
quality which they are giving. So like for
क्या
an
बात है
education
यार,
with
तुम
the
लोग आसपास में बैठे हो क्या? How can both of you are thinking physics वाला?
no, you said so I didn't thought on the similar lines. So again, it's the quality. So to
No, that's
business,
fine. I want a different sector now. Bhavya.
Sir, I think the core reason for a business, like the core objective for a business would be to turn profitable at some point of time.
No. You're digressing. My question is different. I'm asking once you're understanding a business, because see about, when you are on this side, it's very critical to understand the business very well, right? That's so, let's take
Can
another.
I
Krunal,
try
go ahead.
one, sir? Sorry.
No, wait, you got your chance. Krunal, go ahead.
Sir, returns and outcome from the business.
Example चाहिए मुझे. Give me an industry
Sir,
or a
Uh,
business and tell me the critical success factor you think it will have. No,
for
no theory with me, please. I'm
sir,
here
can
to
I?
talk theory. Who's there? Sorry, who's can I?
B21.
B20. Okay, there. Go ahead.
Sir, we can take an example of Lenskart as they revolutionized the eyewear industry by making the virtual intelligence, virtual eyewear that we can go to their app or website and try new glasses. They also give us glasses at a very affordable rate. The omni-channel presence they have, like the offline stores, the online channels, and the way they customize and send the glasses makes the a critical success for them to be a great company.
Perfect. So basically, what you're saying is that they got the product price. The first was that, by the way, right? I think the most revolutionary thing that the starting point was for Lenskart was they've got transparency that and basically they got the product and price right. So that was the critical success factor, was the supply chain to kind of on the one side to kind of crack the supply chain to make that possible. And then of course if you're talking about offline, the location. So in fact, the simplest example I always use is retail, right? Any retail business, right? Whether it's a Theobroma, or say a shopper stop or anything. If retail is the business, let's ask. So if retail is the business, what is the critical success factor that comes to your mind?
Sir, the
Anyone?
customer
Okay.
service they provide.
No. Darshit, go ahead.
Sir, how fast they are able to churn their inventory?
No. Dhruv, critical one factor, a
So,
topmost factor.
I'll just not, of course, I think you don't really like theory. So I'll just take a real life example. We all have heard about Ozempic, right? The
Hmm.
drug which is going on for weight loss, which a lot of these actors are really using, right? The only thing which they have cracked, it's not the research which they did, right? It's the kind of patent or an IP which they created, right, around that product. Now, today till 2029, no one can create use that product. By the way, this product was live in the US since 2014-15. In India, it's live since 2021. So technically, this particular runway which they get till 27, these years, whatever the returns which were made, was the critical factor for that particular business. So an IP or a patent which can go on for a long time, that can be something.
So, but retail, coming back to retail very quickly, the most important thing obviously is location. Everything else is separate, right? If you get the location wrong for your retail outlet, it's as common sense is, right? I mean, if you can't get the location right for your retail business, everything is bullshit. Nothing, because there's no footfall. Baki sab to baat ki baat hai. So anyway, we spent a lot of time on this. So basically, you map it, and it not be that it would be only one. Maybe you will map 5 things, right? That location, someone said supply chain, someone said branding, whatever is the 5 things you have written, right? But not more than 5, because then otherwise you're writing the whole world, which is irrelevant. You have to kind of understand the business and create 5 critical factors at most. Ideally 3, not more than 3, but maximum say 5, and when you're understanding the business. And then the second side that you try and do is when you're meeting the founder, you are trying to meet him again and again, look at his CV, look at what he did in his first 25 years or whatever it is, whatever age he is, or 30 years or 35 years, and try to see his experience and skill set compared to that critical success factor. So just to give you an example, since we were on retail, which was a simplistic thing, if location is such a critical aspect, so you would want, and this guy, suppose is a 32, 33-year-old man, and, there are 2 people. So for example, one guy who has been, in TCS as an example, right? He was a big programmer there, became a senior programmer and a app developer, etc. He comes to all of you who are angel funds or whatever VC funds, and he tells you that I want to open a retail chain for accessories, as an example, something like a Zoot or whatever, right? That's candidate number one. And candidate number two, who has come to you from, say, Damart, right? The listed company, Dmart, whatever, Dmart, right? Who has been instrumental, and in his first 8-10 years of experience, he has gone and opened at least 20 stores of Dmart. Now tell me which, just type in your chat, right? The first one was entrepreneur number one, which was the TCS guy, and second one is the Dmart guy. Which one will you back? Demand, second one. Right? So why is that? So you guys now said it obviously because you understood that his experience and skill set clearly correlates to the critical success factor of that business model. Now, if the business idea is different, for example, he's coming up with a massive AI tool which is going to, like all the private equity fund managers like me, we come and talk something for 3-4 hours, and it becomes like a course for people like you, and it is all AI. Then which one will you choose? Guy one or guy
First
two?
one.
First guy. Right? So this is, yeah, this is so critical, right? Zepto being an example, right? That how you that is why what is important is first, how well have you understood the business? And the good thing about Finacle is that you are made to do a lot of scuttlebutt, right? You go and spend time on the ground. At least I remember that a lot happening earlier. I'm sure it must be happening even now when you're spending time on the
Now it
ground.
is more.
Huh? Sorry?
Actually, earlier it was in the later part of the program when they will study business analysis. Earlier it was a choice.
Acha.
Now, actually, half of the scores in the research work are actually attributed to the scuttlebutt process. What you can bring on table, which is not already published in the PDFs by
Fantastic.
the companies. So that's your edge
Wow.
in the market then.
Fantastic. Great. So super. So you guys are so well equipped, right? That you're really understanding the business in so much detail, right? And then if you understood it so well, then it is much easier for you to map the skill set of the guy, right? Who is coming to the table and, talking to you as a founder, right? And it need not be that, maybe I use a very simplistic, example, but even younger guys, right? Say, it could be a 24-25-year-old, but how has he, what has he done in his last 5-6 years? For example, you guys, right? Why are Touchwood Finacle candidates so? It's the analogy is very similar, right? Why all the PMS industry and everyone is hiring you guys, right? Because you are able to substantiate that you already done what the guy is looking for, right? That's I'm very simplistic analogy, but at least I hope that helps you guys to understand. So this is point number one when you are meeting a founder. Oh, we got only 29 minutes left. So this is point number one.
So
Time
you
जल्दी चला
definitely
जाता है यार
want
प्रतीक.
session number 2. Let it make it a series. At least 2, 3 sessions. Because the thing is, not to
So
overstate, but such kind of clear understanding is not available, sir, in books, blogs, videos. So it would be my genuine request if you are way too busy, if you get us time for one more session to wrap up the complete understanding, we would love it to have you for one more round, sir.
ठीक है, we'll chat about it offline. I don't want to commit and then get slapped later. मैं नहीं करना चाहता, so we'll chat about it later. Right? But so second point is, so when you understood this, right? Now second point is that ठीक है, वैल्यू क्रिएट करने का दिख गया आपको कि चलो ये बंदे में दम है. Everyone understands Hindi. Is it okay? I know maybe there are some South Indians and all, but anyone who does not understand Hindi, please raise your hand. Is there anyone who has no idea about Hindi? It happens with me. English chalega na? So that's okay. But it's okay. Good. So then at least this is, yeah. Because I remember one lecture I was doing somewhere, and there were some 3 people who then came later, sir, you spoke in Hindi. I said, oh, sorry, I didn't, so that's why I'm now checking. Some people don't like it. So, if that is the case, please raise your hand. I'll make sure I'm speaking only in English. But so point is कि that, as I said, बंदे में दम दिख गया कि ये बंदे में जो इसको करना है, इसके पास वो स्किल सेट है, वैल्यूज है, सब कुछ है, करेगा वो. But that is part of value creation, right? Now, the second part as an investor is you have to take your share of value, right? Ultimately, the value has got created in the company, but the second, that is where it's very important when we look at things, is something called as willingness to share. It's extremely critical, right? I think it's grossly understated, but if you actually go and do a AI search or a Google search on litigations in private equity, right? Over the last 15, 20 years, I mean, the actual cases and the litigation would be different, but the underlying issue, is was that why should I this guy just put in money and now he's going to make so much money. If that kind of a thought process is there in the promoter's mind, you are very sure you will never get the optimum value. He'll find something. He knows everything. He knows your fund life. He knows anyways, these promoters are extremely smart. So they will find a way for you guys to kind of keep dragging and then make sure. So I will not name the company here. I will not, because that's not for me to name, but this was a company, a large company. If I give you any hint, you will get to know. So I'm not going to take any hint, but I'll just give you the mathematical example. The global financial crisis happened. This is 2008-9. I think maybe in the third or fourth year of my private equity career. And the stock, the investor has got this, purchased this shares or invested at say 100 rupees, right? The share. And this guy figured it out that, okay, and he's a master. This guy, of course, wants to keep everything with himself. He knows that long-term value will be bit, but now the global crisis is there. Now my investor is scared. This is a real case. The guy, investor had purchased at 100 rupees. The guy scared the investor, purchased all the stock at 70 rupees. In 18 months, he sold the same stock which he had got for 70 rupees at 300 rupees to another private equity investor. So he made money in his own stock. Can you imagine? No, I'm not going to take any names, Ashna. That's not for me to take. But the point is that what did the investor get wrong here? He did not get wrong the critical success factor. He knew that value is good. This person will create value, and the person actually created value. But what the guy missed out is the diligence on willingness to share, right? And it is again never easy, but of course, and see also what has happened is that you have to, kind of look at the history of Indian PVC industry. We were a very young industry then. Like US has started in 60s, 70s. So they of course have a much longer learning curve than India. India, it only started in the late 90s. So we were also learning, right? But this was the biggest miss in this specific example, that you never worked on anything to find out. So how do you find out, right? So what you do is, of course, just like you guys do some sales cut, we kind of try and talk to people who have been associated with you, a few years back. So for example, and Pratik will remember this, right? So when Radhika and Anurag, both your ex-students, were in my office for a few months, etc. And then I had evaluated everything, and me and my group of investors, we had to take that final call whether to put in the money or not. The first person that I reached out to was Pratik. Ki kya karna hai? I mean, what is your view on the guy, right? So you, as an investor, you will kind of reach out to people, right? That's what I'm trying to say, that this is one is skill set and all of that. Second thing is you try to whether this person has that mindset ki boss इसने जाके अपने vendor को से अपने printer को पैसा ही नहीं दे रहा है, or he's trying to create issues just purposely, etc. So you want to go and find all these things out, right? So this is the
Just to add here, sir, और review के बाद quickly, I hope, sir, the feedback proved correct. They have got
absolutely.
phenomenally built.
Yeah.
I,
No,
I
I
was
think that these.
I was so tense at that point of time. On one side it's you, and one side this brilliant students, but actually
Yeah, no,
they
no.
did magical.
Yeah, touch wood.
That's
They're
my
doing well. I think very hardworking founders, very transparent founders. I think that's what, right? Ultimately, see, we all know businesses will go through their ups and downs, right? That is a given. Nobody has a straight line. वो सिर्फ फिल्मों में हो सकता है, right? कि तुमने वो रणबीर सिंह बन गए, तुम वो भी उसने भी वो क्या था, वो सेल्स वाला कंपनी, What is that sales movie? I'm forgetting. Rocket Singh.
Rocket
Yeah,
Singh.
Rocket Singh, right? They also then had their ups and downs, right? Before they kind of. So point is that every business will go through your ups and downs, but you, as a founder, whether you got that, willingness to share, etc., and be transparent. So, anyway, coming to very three I's, as I said, integrity, intellect, intellect, I call it that match of critical success factor. What there is a skill set is what I, in a very single word, maybe call as intellect, integrity. And third is willingness to share. Integrity is, of course, basic stuff, right? Work ethic, which you say, for example, right now, right? All of you are showing a lot of integrity by participating and being here. That is also integrity, right? So when we are actually doing the first meeting, we judge whether the founder has come 5 minutes early, 5 minutes late. All these things are going on in your mind, right? Like how much the basic, I mean, you guys, you youngsters, you will think it is also small things, but these things are all kind of playing on in the decision making when you are deciding the founder. So yeah, so quickly, I think because I want to give at least 15 minutes for questions. So I think we will see that, Pratik, because I know we've just started, but so market and all of that we understood, and founder understanding and exitability is very critical. So what you will do for exitability, I'm not right now going into the IRR, how do you do projections and all that, that will become too detailed. We'll maybe do something else on that.
That's a we will teach. You go ahead with your experience, sir. Labor work we will do for sure.
ठीक है, good. Great. So how do you then, so what do you do for exitability? Again, very critical aspect. I'll spend the next 5 minutes on that, and then maybe we'll leave the last 15 minutes for questions, because I know a lot of curiosity might have just got created. So people can ask questions to me. So exitability analysis is very, very critical. So theoretically, of course, for us to kind of say one word, and I think, of course, you guys are quite bright that you immediately thought about a trade sale, right? Or selling it to a VC. Now, how do you actually on the ground make up your mind whether this will happen? Or see, anyone anyways cannot underwrite anything 100%. It's all equity risk, and that's why the IRR is there. But what work as young fund managers, as young analysts, can you do to make more and more background preparation on this angle of exitability is very critical, right? So the first, so let me ask, let anyone raise your hand. What would be the first thing you will do to understand whether a trade sale is possible or not? What research will you do? हितांश बहुत बोला तू अभी कोई और anything comes to your mind, speak, guys. It's okay. There's nothing here. There's no award going to be given. हाँ, Ayush, go ahead. Yeah.
हाँ सर, अगर उस पर्टिकुलर बिजनेस की कोई स्ट्रेंथ किसी बड़े कंपनी की बैकवर्ड या फॉरवर्ड लिंकेज में हेल्प करती हो, तो वो एक बहुत अच्छा ट्रेड सेल हो सकता है सर.
Very interesting. Good. Perfect. So you so basically what you would do is you will kind of understand this product or service and try to analyze the other players in and around that ecosystem and try to see if there is a map, basically, right? Good.
Yes.
Okay. Anyone else? Yes, Ashna, go ahead.
Yes, if I can see a probability where
Yeah,
yes,
keep
I'll
your
just
camera on. I agree with this. You have to keep your camera on.
yes, actually I'm logged in with
Unless you are
two
in a parlor.
devices. No, sorry. So 1 second, just give me a minute. Yes, sir. Sir, so 1 second,
No,
can you see?
No, we cannot see you, Ashna. But if it's too much of a problem, let it go. I don't know what the issue is.
Yes,
It's
I'll just
fine.
continue with my question.
Yeah, go ahead. Not question, answer. You have to give an answer right now. You are explaining exitability analysis, how to do, right? You're giving me an example like the other guy gave. Ashna is, I think, Ali, you go ahead. I think she's on some network issue.
Yeah, so yeah, sir. So basically, when I'm selling to someone, right? So for you at that current point of time, the return is not according. If your fund size is small, so you would look at the 25-30% returns, let's say 40% IRR. But if it's a big PE, then they would be okay with a 20% IRR. So you'd look out for someone for whom that return from that period of time makes sense, right?
I think
So
what
you
you're trying to tell me is what, I mean, I think you said it in a different angle, but I'll take you what I took out from it and, and what actually we do. So basically what, for example, it's a consumer company, right? As an example, let's just say that it's the most it's the new age Parle G biscuit, gluten free, organic, as an example, right? हम बच्चे थे वो वाला पार्ले जी नहीं, आप लोग का नया पार्ले जी, right? So so what you will, for what I think you will try and do is that and it's a startup, so you may go and talk to food related or consumer related larger funds and sit with them, and this is what we do actually, by the way. So when we make these kind of analysis, etc., we will go and sit with these larger fund and say that, see, I'm not naming the company, this is company A, and this is our assumption of the projections 5 years out. This is the biscuit, you please eat. हम नाम वाम निकाल के उसको बिस्किट खिला देंगे. And then we will ask them that if this kind of a company with this product achieves this kind of numbers, do you think this will excite you later? Right? This is a very important exercise that happens, right? And touchwood, we are blessed at JM Financial because our network is so large, right? For us to kind of reach out to funds, reach out to for example, when we invested in the ice cream business, we could actually go and sit with the Hindustan Lever M&A team, right? And talk to them that, okay, ये हम, ऐसा Nick ice cream में हम invest करने का सोच रहे हैं. So, if this product becomes bigger, do you think there will be strategic interest from a qualitator? So this is, I mean, the value of this is like more than diamond or anything else, right? So I am hoping this is what you wanted to say. I think you said something else, but this is what actually would happen
Okay, sir.
from an exitability analysis perspective, right? So you would kind of talk to all the stakeholders right up front, create a scenario in your mind that, okay, after 5 years, the company will look like this. So let me reach out to, so for example, if I'm doing something in agri, I will go to Mahindra and Mahindra's M&A team, sit there and tell them that this is an idea we are looking at. We think this is the company's product. This is after 5 years, we'll reach it. Do you think this will excite Mahindra Group after something like that? So you get a sense. Sometimes they'll just shrug it off. This is all nonsense. So कि बस इसमें कोई interest ही आने वाला नहीं है, छोड़ो हटाओ. Sorry, Anuj. Yeah, go ahead. I think last point, then we quickly jump on to questions. Yeah, Anuj, you wanted to say something. Go ahead.
Yes, maybe we can look at the balance sheets of the competitors if they even have the strength to buy a new company.
Balance sheet. Good one. I think that's a good. So how much cash actually potential buyers could have? Fair. Ashna, I think you're back finally from the parlor. Go ahead.
Yes. My thesis behind any of the trade sales could be that when a old company, which is probably say 50, 60 years old, is looking to acquire a new age company, we can take an example of this is the example I read when I was doing CFA, currently level 2. So there they give a wonderful example of a company which is like 60 years old, but it is willing to expand into it belongs to music industry, right? But now the new age companies have come up with new innovations, AI, tech, pen drives, hard drives, but they need cash to grow. So acquiring also in the same industry could be one of the forms of trade sales, where you trade your company or you buy a stake or you acquire a company. And that's how, yeah, my
Okay, great. Thank you. Good. So I think maybe, in the interest of time, and since so many of you are there, and maybe we can take, we've got 14 minutes left, maybe 6, 7 quick questions, anything, any random questions that come to your mind, and, because we don't know when we'll meet next. So at least, are baap re. Okay, people who have, let me go to page 1. Okay, Tarush, go ahead.
Sir, am I audible, sir?
Yes, clearly.
Sir, since you have analyzed many startups, I just wanted to ask, what do you think is the right age that a person can start his own business? And what do you think, how much work experience does the person need? And what qualification should he have for the particular industry?
Okay, great question. I think the good thing is that it has some linkage to what we spoke about earlier, right? The critical
Yes,
success factor and all of that. So, I mean, of course, there are exceptions, but and of course, every fund manager has a different style, right? So, for example, again, I will not name, but there are funds who, unfortunately, in this country have a maximum age limit. It's the other way around. So suppose a founder is, say a 57-year-old or almost just about to say 55 plus. Unfortunately, there are certain funds who have a criteria that they will not back them, because they feel that things could happen and all that. Personally, for me, I'm very proud that I have backed founders start a business after the age of 65 and they've killed it. So I don't have such hangups, and I don't believe one should have. But of course, there are certain people. So that's on the outer side. But on the minimum side, I always feel that because entrepreneurship is a so much of responsibility, right? I mean, and this is my, advice to a lot of youngsters, and that, just raising around means nothing, right? Raising around actually means a lot of responsibility, because what happens, and this is so critical, and I think I would encourage you. I think this 1st September, Outlook Business has come up with a beautiful article on PEVC. You guys all should read it, because it will explain to you how the domestic PEVC capital raising has been. Very beautiful article to be discussed, but not now. But point is that what happens is that when entrepreneurs take outside capital and fail, one, it's not about only, what happens is that, and especially in India, this I see a lot, that unfortunately, right, even very, very wealthy families in this country, are not very long term oriented, not very failure savvy. For them, "Arey yaar, mera paisa," though it may mean nothing for them actually, but India is still to evolve for mistakes to happen. I'll be very honest. I think we are still much, as a society also, we're not so open for mistakes, which is sad, but we have to really get there, I think. And as the next generation, we have to make sure that we are more and more open for our younger generation to make mistakes. So I think coming back, so the current reality, I would always urge someone to have at least a few years of work ex, maybe 2, 3, 5, whatever, because you've seen the world a little bit more. And then, kind of, also then there are certain, it could be a different industry or whatever, doesn't matter, but at least there are skills that you pick up which would be useful in your venture. So ideally, I generally don't encourage that straight out of college. You kind of, you do something like for example, Radhika worked with JM Financial at least, right? For some time. Her brother had worked. So at least you work somewhere is what I would always prefer,
And
but not a
sir,
rule. Yeah. Yeah.
some skills that we should develop before starting a business, like few important skills that come in handy.
Few important skills that, see, first skill is that, see, as a startup, the you have to forget that you are a founder or big man. You have to become the peon also. You have to become a man. I think Pratik can answer this better because he's an entrepreneur himself. I'm still an employee.
But I
But
wanted to, I
bolo.
on myself at that point.
Go ahead, Pratik.
Thank you to allow that. Who asked the question?
Me, sir.
Yeah, so Tarush, to be very honest, because Vinay sir is allowed, beta, you need to be aware about LinkedIn पे कंटेंट कैसे लिखना है कि आपको राइट टैलेंट अट्रैक्ट कर पाओ, टू हायर क्वालिटी पीपल, टू वेबसाइट का एसई और परफॉर्मेंस मार्केटिंग कैसे चलता है कि आप एक अच्छी एजेंसी को रिक्रूट कर पाओ, टू आपके कॉम्पिटिटर ने एक भी डेवलपमेंट कर दिया है तो आपकी सेल्स टीम उसको इनडायरेक्टली पता कर सके, अकाउंट्स जीएसटी के सिस्टम्स कैसे चलते हैं कि आपके टाइमली बैलेंस शीट्स, पीएनएल, एडवांस टैक्सेस अप्रोप्रिएट चले. द लिस्ट इज एंडलेस. इन शॉर्ट, आई वुड जस्ट एडवाइज वन थिंग. अगर आपके घर में बिजनेस है या आपके फ्रेंड का किसी का बिजनेस है, प्लीज स्पेंड सम टाइम गोइंग देयर, चाहे आपको वो करना हो कि नहीं. यू विल अंडरस्टैंड कि एक प्रमोटर को 2 घंटा भी नहीं मिलता है सोचने का, उसका पूरा दिन निकल जाता है काम करने में, फिर वो रात को बैठ के सोचता है नया क्या करना है, रीडिंग अबाउट योर इंडस्ट्री, क्या नया करूं, टॉकिंग टू कस्टमर्स, जो कर रहा हूं उसको अच्छा लग रहा है कि नहीं. That list is endless. That is why promoters end up working 16, 18 hours a day. Correct? They sleep alternate nights in the initial decade. That is not they wish to do. That is the business critical factor that we need to get quoted. That has to be there.
तो वही है, तो प्यून से शुरू करना है तुमको. एंड ऑफ कोर्स ही सेड अ मच हायर थिंग्स. मैं तो एकदम बेसिक में शुरू हो गया कि पहले प्यून बन जाओ. राइट,
Thank you, sir.
थैंक यू. हाँ, यस, दे बोलो.
First of
We
all,
got 8 minutes. हाँ.
First of all, thank you, sir, for giving us this opportunity to learn from you. So secondly, I have a question that how do you chase higher growth sectors while staying with the investment thesis of the company while investing? Sir,
Uh,
how do you balance chasing high growth sectors while staying in the investment thesis of the company?
which hat am I wearing? Am I wearing an investor hat or am I wearing an entrepreneur hat?
Sir, investor head.
Investor hat. So if how do I look at the investment thesis if the sector is very high growth sector?
Sir,
So
such
like for
as
example, quick commerce as an example. Would
sir,
that be the
such
right?
as if there is an investment firm which sticks to agriculture technologies or D2C brands to invest more. So what are the balance chasing high growth? What they do to balance the investments in high growth sectors while sticking to this thesis?
Understood. Fair. Now I get it. So I think the question that I find relevant is basically what is it? I think quick commerce is a classic example, right? It's just super high growth that is happening in the last few while there is no profitability at all, right? Everything because then you're basically betting on the greater fools theory somewhere, right? Or some kind of a theory that will ultimately play out, right? So there are funds who play that, and of course, as I said, the background to the initial mandate itself will be that they are okay with like a high failure rates. For example, as JM Financial, we're across three funds, almost 35 investments in the last 19 odd years, 18 years, but not a single company has got written off. We may have lost कि 100 में खरीदा तो 70 में बेचा, but not one company has become zero because our failure rate tolerance is less than 10%. Right? But the very fact that you're stating this kind of strategy means you initially itself you kind of clarified to your investors that was I'm going to chase high growth, and whether the company burns money or not, I don't care. So so you are already okay with a high failure rate because otherwise, so if you ask me whether JM with this strategy with a low tolerance rate of failure, we be doing these things? Unlikely. It's not the stated strategy, so you wouldn't be doing. So if your strategy stated that I'm going to chase high growth, high burn companies, so what is the then once you're okay with the failure rate, that is point number one. Second is of course then is the very strong understanding of the unit economics that okay, what is the unit level economics, for example, in what is the order level, वो trip बंदे को देने के बाद भी क्या बचता है क्या नहीं बचता, so that unit economics you have to learn very very well, and you have to separate the expenditure etc which are not unit economics linked, and then kind of model it and all of that. And then the third thing which you would do balance means again, if things are going to go wrong, have you done your exitability analysis well, that kuch bhi karke I will be able to, say sell to an Amazon and get out and at least get my capital back. So these are the things you would do to kind of balance the risks you're taking to chase high growth, which of course, if it plays out very well, it will be a big outcome. But if it doesn't, at least you will do these few things to kind of, recover as much as your capital back.
Okay,
4 minutes left.
sir.
Who is
Thank
left?
you.
Guru, bolo. Yes, Mr. Guru.
Thank you, sir. I'm audible?
Yes, go ahead.
Sir, I have a specific question. When you look at or when there is an investment opportunity where you're looking at a company which is on the verge of bankruptcy, there is a revival happening. What are the critical factors you look at to make an investment in those kind of companies?
So
It is
again,
actually a current scenario for me. So I just want to understand what are the
okay, got it.
things you look at.
Understood. Sure. So, of course, I've seen this a lot. It's not a stated strategy for us, but then the first thing that will come to you is that कौड़ियों के भाव में तुम लोगे हो, right? You will buy it extremely cheap, right? So, for example, just to give an example, if it's a housing finance company, right, and the entire housing finance sector, affordable housing finance sector, says trading at 3 times price to book, as an example, and you are evaluating a situation where इधर इसका नेटवर्थ का आता पता नहीं है, एनपीए बहुत ज्यादा एटसेट्रा, you will negotiate at 0.5 times price to book. So you will get your entry price at like rock bottom, right? That is your point number one, because then only it makes sense. Otherwise you're taking, because you also in your mind, Guru, know that there is a very high chance that your money will go down the drain. So you will negotiate a very, very good deal. That's point number one. Point number two, you will understand the reasons of the bankruptcy in like super detail. Like literally visiting the houses which have become NPAs. Because you need to understand whether that NPA happened because of an intention of the management, or it was a external issue, like for example COVID happened and drivers ran away, so फिर वो affordable housing finance का company का EMI कौन देगा, that is okay. So you getting to the bottom of the fact, Guru, that how did the crisis actually happen, right, is very, very critical. That is very critical. So once you understood those reasons, then there are two choices. One is that if it's the COVID related issue, then and you're still trusting the management, it's fine. Then you of course will continue and say, okay, this was an external scenario. Now I'm giving you survival and growth capital. I know it was not your fault. And now that situation has become okay, we will be doing a great job and all of that. And for this, you're giving me a cheap deal. Scenario two, if the guy has actually created this situation, मतलब क्या कि वो उसका ही बिल्डर था, उसने वो साइड में कमाया है और उसके वजह से एनपीए हुआ है, then you know that boss, if you understood that this guy is not trustworthy, then I'm going to bring a new management in totally, because I know I'm not going to put money with this management going forward. So then you will of course have to kind of immediately create a new management, and only if you're confident of this new management, or unless you are the guy who's going to be the management, will you take this bet, otherwise not take. I think we have last 1 minute. We'll just take one more question who has not spoken so far. Maybe Raghav. Go ahead, Raghav.
My question would be, if I want to become a venture capitalist, so what would be a daily habit I need to adapt today?
Oh, lovely. What a question. Very, very interesting question. I think, especially, and I will give this answer in context to India. I think, if you really want to do that, every day be on the ground and talk to people. You won't believe, like, for example, this Tuesday, I was in Bareilly, which is, Delhi से 300-250 किलोमीटर. I was analyzing the solar panel industry. Right? Basically, you आपने listed में देखा होगा, वारी है, विक्रम सोलार है, etc. This is an unlisted company I was evaluating. You know what I did, and people were shocked. I am the managing director and co-head of JM Private Equity. What I did, 45 minutes, एक डीलर था, उसकी मेरे को दिख गई वो रॉयल इनफील्ड है. मैंने बोला, सर आपकी तो रॉयल इनफील्ड बाइक है, आप मेरे को बिठाओगे क्या? वो तो खुश हो गया. उसने मेरे को बिठा लिया बाइक के पीछे 40 मिनट. मैं 40 मिनट सिर्फ उससे क्वेश्चन आंसर कर रहा था. And I decided not to go ahead with the investment, right? So I think a short answer is that you have to be, and you should enjoy this, right? So people were zapped that मतलब मैं आटा चक्की वालों से मिल रहा हूँ, ये मिल रहा हूँ, गांव गांव जाके, वो भी किसी feet on street के बाइक पे बैठ के पीछे, because this is the only way you will build conviction in yourself, Raghav. So this has to be your daily habit. जो भी है, पढ़ना है, लेकिन talk to people. Go crazy about learning about businesses on ground. Just focus on 2 C's: customer and competition, customer and competition, customer and competition. जितना सीखोगे उतना कम है. I think now we are done. ठीक है,
Thank you
3:31.
so much. I really appreciate it.
I hope this was useful.
Yeah, I do.
Thank you so much, Vinit, sir, for this lovely time. One of the best sessions, sir, we have had in our academy, in terms of
Thank you.
actually understanding without fluff what actually matters in the real world. Thank you so much, and it is a very timely session, sir. Actually, last 1-2 years के अंदर ना lot of people have started turning entrepreneur. जेब
Right.
डालन हुआ, दर्शित दोषी है, उसने नटवरत्न टेक्सटाइल के अंदर B2B के अंदर क्रिएट किया है. वो ध्रुव राठौड़ जो आपसे क्वेश्चनिंग पुट अप कर रहा था. So he
Yeah.
graduated, I think, 2-3 years back, Finbridge. Then he went into PMS side. Now he has actually got promoted at Inflection IPV.
Oh,
So
lovely. Nice.
he is leading the VC के साथ, नितेश सर के साथ, IPV डिवीजन के अंदर he is working. So अब ये ट्रेंड आना चालू हुआ है कि not just
Nice.
listed market, we want to go to the private side also, or entrepreneur side also. So
Fantastic.
I'm really thankful, sir, कि आज ये
No,
आपने
not
session
at
दिया.
all. Yeah.
It
Of
will
course,
open their
anything.
dreams to new avenues. And
Sorry?
as it will open their brains to new avenues, actually.
Yeah, sure.
And at least you have promised me that I can chase you for second session. You will commit or not, but as you told, I can chase you, so I will come back for second session to you.
Sure. Great. Thank you so much. I
Thank
hope
you
all
so
of you
much,
had
Vinit,
a
sir.
decent time and look to meet some of you at some point of my time in life. Chalo, see you. Bye.
Thank you so much.
Thank you,
sir.
sir.
Thank you. Bye, guys. Bye.
Thank you,
Thank
sir.
you, sir.
Bye, sir. Thank you, sir.